check. Mic check. What's up, everyone? It's Sunny and So Sovereign. Hopefully, everyone can hear me right now. I'm gonna go ahead and just checking my audio real quick. And I think we good right here. So again, it's Sunny and So Sovereign, and we back with another crypto update, market update. Um, I think it's like a little past 12. Yeah, it's 12:12 a.m. Eastern time. Just got off work about an hour ago, but I needed to jump on here, and you know what I mean. I needed to see what's up, what's going on with the markets. I had some news I really wanted to share with you guys, and bounce some ideas back and forth and get your guys' opinion. So if you guys don't know, here in this channel, the Soul Sovereign channel, we stay up. We try to stay up to date with technical analysis with within the crypto market. We try to stay up to date with the latest trends, not trends, but latest news and topics, and what's going on. Um, and yeah, just the big goal here, we are starting to fund Soul Sovereign Ventures on the blockchain, completely transparent. Um, yeah, we just want to go ahead and do our part and try to fund, the next companies of the future and try to change, um, you know, the way these companies are ran, the whole model. Uh, Try to put some more transparency in that, but I won't say too much right now. But that's exactly why we try to stay up to date with the market. Um, and the way we're starting this fund. We are raising the capital by selling these NFTs. We are creating these NFTs, 10,000 of them, a little over 100 unique NFTs are going to be made. Definitely going to have some utilities. Just stay tuned for that. And again, just everything on the blockchain, complete transparent. All the profits are going to be on the blockchain. Our fund, our Soul Sovereign Venture, is going to be on the blockchain. Um, if you haven't, if you don't see, I'm pretty sure it's on my screen. Dang, it's really, it's not. One second, you guys. That sucks. I'm not gonna be able to put it up, but um, my Discord link was usually up there as long. Also with like my Discord and my Twitch channel, but can't do it now that we're on already live. But we're gonna go ahead and keep it rolling. So, um, let me see. How should I start this off? Let's go ahead and start off with looking what's Bitcoin doing right now. Let me go ahead and move some things around. So again, let me go ahead and finish what I was saying. So yeah, we're raising capital with this fund by selling these NFTs, 10,000 total. They're definitely gonna have some utilities, but yeah, I'm not gonna go ahead. I'm not gonna say too much, but what I will say is everything's gonna be transparent, and we're definitely gonna go ahead and change the game for sure. I want to see more people that look like me step into this game, not just as investors, but as people that utilize this technology. Um, like 19 Key says, there's a lot of ways that this technology hasn't been used yet. So we just need creative, business-minded people to come in and change the game. Um, and today's news, I think, is going to be really interesting because it really touches into that, and with what we can do with blockchain and the transparency that it provides us and whatnot. So without getting too ahead of myself, let's just go ahead and jump right into Bitcoin. Hopefully, you guys can still hear me well. And so, yeah, Bitcoin is currently sitting around $19,264, and we are looking at Bitcoin on the daily on Binance, calculated by Binance TradingView. Yeah, we're on TradingView, and it's looking at the Binance exchange, the BTC against USD. Um, Again, sitting around $19,264. It's acting real boring. If you guys see my chart right here, you see this what I drew up. This I kind of see it playing out. Um, yes, this is sideways. This is sideways movement at its finest. Like I've been saying in almost every episode, the crypto market is gonna start moving like the stock market. It's like the best way I can put it. I'm not no stock market guru, but that's Earn Your Leisure and Ian Dunlap and them. But yeah, it's just gonna be long, boring, long and boring. So let's go ahead and look at it on the like 5 hourly, 5.5 hourly, and we could go ahead and click on it. Sorry, you guys, technical difficulty at its finest. Why is it doing this to me now? I don't want to click on it. I'm about to like not use this tool because it's like more of a pain than anything. So let's go ahead and move into it. What we got. So if you guys don't know, I use moving averages quite a lot, and it's been working for me. As long as I've been using it. So here, let's see. Obviously, it's looking a little bearish to me. Whenever I see it under that 231 day moving average, and that's why I made it highlighted here. If you guys see it, and I always the person that I learned it from, which was like BK Crypto. You guys can go check out his YouTube channel. He always referred this as like water. So when you see these pips under the 231 day moving average, which is highlighted like water, it kind of looks like water. You could I kind of think of it as we're underwater right now. The momentum is heavy, and it's looking like we're going to a downward, a leg, another leg down, which right now would kind of make sense, but depending on the kind of investor you are and whatnot, because Ethereum is about to have its run. The merge is coming, and I am a firm believer that Ethereum does lag behind as when we're talking about price action. It does lag behind, in my opinion, just because all the innovation happened on Ethereum, and Ethereum still holds the most projects built on it for sure. Um, so I really think there's gonna be a major change. I don't know when. I don't know if it's gonna be before the merge, on the merge, after the merge. Um, but I think Ethereum is gonna at least catch up price wise, whatever you think that price may be. I'm more leaning toward the $10,000 price range. I really think it could play around there. Um, whether it shoots up to only six and you know whatever it wants to do. You know what I mean? But I could really see it being now that don't now it really does. How should I explain this? I'm not even gonna go into it too deep, but yeah, um, Ethereum. A lot of things are happening on with a lot of layer one blockchain. So that being said, I say that because usually when Bitcoin goes down, what happens with Ethereum and altcoins? Usually tend to do something else. I've been in this space for since I like to say 2019 now. I think 2019. Um, and it usually the way I learned how this crypto market moves is usually like, and I should keep moving my screen for visual effects. Huh? Kind of sucks when I'm not moving my screen, but yeah, I kind of learned that when Bitcoin is rising, then all the other market caps, Ethereum and then the altcoins are really doing nothing. Then when Ethereum starts rising, some altcoins starts moving, coming to life a bit, and then once Ethereum starts slowing down, then it's usually altcoins that coming fully to life, and then that cycle just kind of repeats itself. Um, Lately we've been seeing Bitcoin, Ethereum, and like the stock market all kind of just doing the same thing. Um, but right now a lot is happening when it comes to adoption, when it's coming to rules and regulations, especially in the U.S. and all that stuff. So I think it's definitely time for some price movement for sure. Um, but yeah, let's see what happens right now. Bitcoin ain't looking too well. I can see Bitcoin hitting some lower lows. Now here we're looking at it on the 7 minute lead on the hourly basically. As this thing goes below 17.8, another leg down is basically confirmed in my eyes, and I just see another leg down going on. So let's go ahead and look at what Ethereum's doing. Again, I apologize for all these ugly looking, you know, whatever they call them, the Fibonacci tool. I should take a lot of these out. Actually, I'm gonna leave those in. So here we're looking at Ethereum against the U.S. dollar on the daily, calculated by TradingView on the Binance exchange. Um, so what do we see here? What do I see anyways? Because I know you guys probably can't see anything. So I'll start from the very beginning here. I went ahead and put a Fibonacci tool on the Ethereum against USD starting from November of 2020, and that's because it started run up from around where we see here. I think that's around, let's say, $500, $600, and it made its way up to 40, almost 4,600 bucks, right? So I put the Fibonacci tool, and basically what this tool tells you is if these pips ever drop below this 0.61%, then we're gonna see some bearish movement, and that's exactly what we see as soon as it drops below the 6.1%. So we see here when, and it was pretty recently, on May of 2022, which was only about 4 months ago. As soon as we hit this 1600, well, I'm sorry, you guys, I got a lot of stuff in my way, but as soon as we drop below like $2,000, Um, and that was where around 0.61% of the Fibonacci tool was placed at. Then that was basically a confirmation that we were gonna start seeing lower lows. Um, so right now, since May, we should be seeing lower lows. Um, if we were, just strictly looking at chart technical analysis. So what do we see here now though? We're still here on the daily, and I know there's a lot of stuff going on. So here the lowest we see that Ethereum hit, and that was of, around June of 20 of this year, which was about 3 months ago. It hit around 800 bucks, somewhere around 800 bucks. Ever since then, it's been consolidating, and then in the middle of July, it did a run up, a pretty good run up. I think it was about 30%, almost 40% run up. So around, it was consolidating, and right before it hit its run up, it was around 900,000 bucks, and it ran all the way up to, let's see, again around the $2,000 mark. That is a pivotal. That's the 0.61% of the Fibonacci tool. So we're right at that mark, that price range, which is 2,000 bucks. If it can make 2,000 bucks its floor, that's basically for me a confirmation that we should be seeing higher highs and higher lows. Um, right now, I know you guys probably can't see it, but the pips are under the 231-day moving average, that water that we like to say, um, and that means bearish movement right now. Um, but when we see that, personally, when I see that red line past that yellow line, cross that yellow line, and I see it right here. So when I see that 21 moving day average cross that 77-day moving average, and those pips can make um, the higher moving average is floor. So right now I see the pip is riding that 77-day moving average, is making that as floor. Um, if the pips could go ahead and make that as floor and then make another run up, especially past the $2,000 mark, and make that as floor, then yeah, that's definitely confirmation for me, and that we should start seeing some higher highs. And also as well, if it does pass that $2,000 mark, we will also be out that 231-day moving average, was what we call the water, which is just another confirmation for me and the Soul Sovereign team. Go ahead, please join the Discord. I know I don't got the link there, but if you're watching my YouTube or watching my Twitch, um, yeah, go join me on Twitter. I'm gonna try to put it on these descriptions. I'm gonna try to learn how to do that. But anyways, back to the charts. Yeah, so if I could see it past this $2,000 mark and make that as floor, I'm bullish. I'm bullish on Ethereum. And right now, a lot of things are going on with Ethereum. And let's see, should we move in? See what else is going on? Not really. I'm not a day trader here, so I don't feel no need to move in. Right now, this right here, this small picture shows us a lot. Hmm. But what I do want to show you guys. So right now, the point, I put another Fibonacci run on this run up. So from the middle of July, when it was around 1,000 bucks, and it started run up to around 2,000 bucks, and then it came down and started making this 77-day moving averages floor, which is a good sign. I put a Fibonacci tool on that run, and as I did, when we see these Fibonacci tools hold, is when we see the pips holding that at least the 0.61 percent, that we can go and place what we call a Fibonacci, I think they call it extension tool, and that's why I got here. And it's basically it gives you an idea of so the 0.61 line is gonna hold, so we know we're on a bullish um, momentum this extension tool is an indicator that lets people know when's the next higher high is gonna be. Like that, people could go ahead and take their profit, and then it goes by an algorithm percentage of what's the usual, what's the average, whatever. And so we went ahead and placed that tool, the Fibonacci extension, and we see the 100% here. And we like to say that usually if the first Fibonacci tool holds and we get to see some part of the extension that we usually see at least at 100%. So if you're very conservative, you'll come out at like the point, the 0.61%. If you feel like you're a better, more technical, more specific day trader, you could come out here. And if you think you're a beast, you could come out here at the 100%. If you think you're a monster, you just do what you want and pass the 100% and go all the way to the 200th. You know what I mean? If you think you're a monster like that. But anyways, I'm conservative. I like to call myself. So I think it's gonna at least come up to 2,300, right? And again, that's past the $2,000 mark. So a good idea maybe what will happen with Ethereum here against the US dollar on Binance calculated by TradingView, right? Is hopefully these pips go ahead, hold this first Fibonacci tool and go ahead and hit 2,300, come down and start making the 231-day moving average the floor. That's what I would like to see, or something like that at the very least. That would be, yeah, that would be ideal. And um, again, a lot is going on with Ethereum this month. I think the merge is happening here, like less than a week now, I believe, where Ethereum is gonna go completely proof of stake and try to become faster, cheaper, consume less energy, so more environmentally friendly, and uh, that also with a lot of other layer one blockchains as well, such as Cardano. And we talked about this on the last slide, so I highly recommend to go check that out. But before we go ahead and leave these charts and jump into the news, I want to go ahead and show you guys ETH against BTC to see what's going on. And that's ETH against Bitcoin. And we're going to see it calculated by TradingView on the Binance exchange, I thought. Yeah. Alright, so calculated. Well, I don't say, usually say something here what I thought it did, but it don't. But we're going to go ahead with the Binance exchange. ETH against BTC, and this thing is looking bullish like a mug, man. Bullish like a mug. Um, so here's a perfect time to show you guys how we could use the Fibonacci extension, right? So I got the Fibonacci tool right here. I'm gonna go ahead and I like this here, but I'm gonna go ahead and take it out though, just to give you guys a better look, and hopefully you guys can still hear me. Again, I'm Sunny and SoVereign. On this channel, we try to stay up to date with all the latest market trends and all the latest crypto news. Yeah, I could just hide that, cool. And yeah, why do we try to stay up to date with all this? Up to date. Man, I gotta work on my posture, man. I've been sitting all day. It's not good for you. Alright. But yeah, why do we try to stay up to date with all this? Because we are trying to become the best fun in community full of just investors America ever seen. And I want it to be people that look like me, and that people that kind of, you know what I mean? People that might look like me, but a billion times smarter than me, please. And they don't gotta exactly look like me, you know what I mean? They could look however they want to look, but I need some soulful people here in the soul sovereign community for sure. And sovereignty is always gotta be the goal. Cause out here we chasing our sovereignty like they ain't no tomorrow, real rap. Um, but yeah, we're opening up a fund where we go ahead and fund businesses that are, that's gonna be impactful. That's gonna be ran, with some, high ethics, and of course we're gonna go ahead and utilize this blockchain technology and utilize this transparency to try to run this business, in maximum capacity. You know, just like how these, layer one blockchains trying to scale globally. That's our goal as well, for sure. And we're gonna utilize this technology. We're not just gonna, you know, stay up to date with the price action and stay up to date with the latest news. We're also going to utilize this technology for sure. So that's the goal here at the Soul Sovereign community. If you haven't already, please go find my Discord, go find my Twitter, go find my YouTube, go find my Twitch, wherever you're watching this. Go find the other social media. I wish I had it going up there on the top of my screen, but it's not running right now, and I can't do it while I'm live. So here again, we got ETH against BTC on Binance. We got it on the weekly, and I want to show you guys how exactly we can use this Fibonacci extension tool. So right now we got the Fibonacci tool, which is holding. Why? Why is it holding? Again, we're looking at it on the weekly. We're going to go ahead and zoom in a little bit. Let's go ahead and make this a little bigger. And we see the price pips here. So I put the Fibonacci tool starting from March of last year of 2021, right? And because that's when it started to run up. ETH BTC, so Ethereum was worth in Bitcoin and Satoshis around, I think that's 30,251 Satoshis, if I'm reading this correctly. I think you read Satoshis like kind of like dollar bills or cents. So it was around 30k Satoshis, and it ran all the way up from March of 2021 all the way to May of 2021. Actually till November of 2021. It hit around. I got a lot of stuff in the way, but I think that's around. Let's just let me see something. Let's just call it 82k Satoshi, 82,000 Satoshis around November of 2021. So around March of 2021, it was only around 30k Satoshis, around 30,000 Satoshis. And by the time November of that same year, 2021 hit, it was around 80,000 Satoshis. So ever since then, we put the Fibonacci tool on that run, and it's been holding that Fibonacci tool, meaning it's still bullish. We've been consolidating for sure. If you look at it, we've been consolidating, but we've been consolidating over the 0.61%, meaning that we should still have another leg up. So we've been consolidating now since May of 2021 all the way till now. So a year, almost a year and 4 months. So a while now. So a leg up is definitely due. I don't see no, bearish patterns. This isn't looking like, no type of head and shoulders, which I mean, depending who you are, you could say I'm not seeing it, and I'm thinking that, a leg up is definitely in the horizon. So where should we take profits if we seeing another leg up? That's what you're probably thinking. So let's go ahead and use that Fibonacci extension tool. So we go here, boom, right here, Fibonacci. I got it even marked here. I don't know where I find it at though on my side here, but I got it starred. And what we do, how you use this, let's go ahead and make this a little smaller so we don't mess up. So we go ahead and we place it in the beginning where we started our first Fibonacci tool in that run. We hit that button. We we go all the way up to its highest mark, right? Boom. Then we go down to where the lowest low of where that pip hit. Boom. And then you could just drag it out like that. You could, I should drag it out a little more. So I'm gonna just go ahead and drag it out to here. So again, and let me go ahead and move this around and make it bigger. And that's how you use this extension. So boom. And if you want to learn more, go ahead, hit me up in my social medias, DM me, and I'll definitely teach you more for sure. If you serious about it, for free, for free, come hit me up. I'll definitely, but sovereignty gotta be your goal, cause this is the Soul Sovereign community. Um, so again, if you're a conservative person, so there's just like the inverse of not the inverse because there's the extension. We're looking to where we should take profits at. Again, it held the first Fibonacci tool, so we are now betting money that is going for another leg up. Um, and we're trying to guesstimate where's the best place we should take profit. So when I say inverse, I mean that the 0.61% is usually where you want to see because that's a good place to buy usually. Because if you see it hold the 0.61%, usually want to go ahead and put a good bag in there. At least the way I'm strategizing right now. Because you know that a leg up is coming, and that's exactly what it did. And it's usually like one, two, three hits on the 0.61% and then leg up. If you want to learn more about my strat and these lines and whatnot, again, come DM me on my social medias. But anyways, once we really see it break out and we're really bullish on the first, hold of the Fibonacci tool, and we go ahead and place this Fibonacci extension to see if we could go ahead and collect some higher profits. The 0.61% for me at least is not where I go and take profits at. You could probably, depending on the type of investor you are, you could go ahead and take some profits depending on the percentage of profits, how you take it and whatnot. You could, if you're really conservative, you could go ahead and take out most of your profits on this line. If you're not as conservative and you're pretty good, if you feel like you could take out most of your profits, if not all, or a certain percentage at the 78.6%. And then if you're a beast, you take it out at the 100%. And the 100% is around 11, let's say 11,000. Was that 11,000? Nah, that is 110k Satoshis. That's where I'm thinking that Ethereum versus Bitcoin is gonna hit before it start making its new floor, which what I would like to see it be around 80k Satoshis, its last previous high, basically. And that's usually the rule of thumb. Its last previous high, you wanted to see it make the new floor at least. You know what I mean? So, that's what I'm thinking. If we look at it here with the moving average, it's well above the 231-day moving average, which is super bullish in my opinion. And yeah, super bullish. So, yeah, a lot of things going on with Ethereum. Excuse me, guys, because I really need a drink. I've been talking now for about 36 minutes straight. I need a drink, so one quick second. Hopefully, you guys can hear me. All right, so where was I? Again, yeah, super bullish on Ethereum. Ethereum right now. Um, like we talked about last live a couple of days ago, a lot of things are happening with these layer one blockchains. Um, a lot of upgrades are coming up with Ethereum, with the merge, Cardano also, and we also talked a little bit about Bitcoin because we don't hear a lot about Bitcoin. It's still proof of work, and I still don't even, honestly grasp the way Bitcoin is gonna resolve its issue when it comes to energy consumption and just becoming more efficient overall. Um, we talked about a little bit about the Lightning Network might be a possibility and whatnot. But anyways, it needs a layer two proof of stake or proof of something else that's going to be more efficient than its current proof of work. We talked about all this last live, and that's why I'm just so bullish on Ethereum right now. Super bullish on Ethereum. Thinking about actually, I got the Soul Sovereign Fund open right now, and we're holding 100% Polygon. And you know what? While we're at it, why not look at Polygon? Because a lot of things are also going on with Polygon. We also talked about it on the. I'm not sure we talked about it in the last slide, but with these new zero knowledge roll-ups that are happening, zero knowledge EVMs as they call it, Ethereum virtual machines. We see a few companies out there are coming out with their zero knowledge, roll-ups, protocols, however you want to call it, solutions. Um, but yeah, we're gonna definitely stay up to date with all that because with this merge coming up and this new beacon chain gonna be live, this proof of work, proof of stake beacon chain. A lot of questions arise like what's gonna happen with Polygon now and its layer two proof of stake uh, chain that Ethereum has, been using this, currently to solve its gas issues and whatnot. Um, but again, recently Polygon been dropping some news that has been working on some zero knowledge rollups or zero knowledge EVMs, and that's gonna be live sometime or be tested sometime next year in 2023. But we're gonna go ahead and look at it because again, here in the Soul Sovereign Fund that we got, which where all the profits will which will, all the profits of the NFT sale will be going to. Um, we're currently holding 100% Polygon, and I think we're going to right now because we just see a bigger run up for Polygon, and not by much. We just think we can just get some better profits of Polygon right now, and I can still see that just by looking on this chart right off the bat. We're looking at it on the daily. This is the Bitrix exchange. Um, and again, yes, that's the daily. So not too long ago, around July of this year, the 21-day moving average crossed the 77-day moving average, and again, making it its support, and not just its support, some nice higher lows, and hopefully we could see a run up to hopefully over this 231 day moving average, or what we like to call here that water, right? We want to come out from underneath that water. So I'm bullish on Polygon. Again, not probably. I won't know what's gonna be. What's gonna be the best when it comes to price movement when we're talking about Polygon or Ethereum right now. But again, we're not day traders here. We're looking for the longer term. We're trying to be, well, we're not trying to be. We're in the midst of opening our own fund on the blockchain, completely transparent, and we're just going to change the game on, how business models can be ran and exactly what you can do with profits and just exactly what you can do with, exactly with transparent transactions and what you can do with, once you got that, what you could do with profits, and what you could do with good intentions. You know what I mean? So that's what we're doing here. So that's why we stay up to date with all these, crypto projects and whatnot. So all that being said, so we went through the Bitcoin chart, we went through the Ethereum chart against the USD and Bitcoin, and now we looked at a little bit of Polygon against USD, of course. Uh, so again, a lot's been going on in the market. On my last live, we discussed a lot about, and a little bit on this live now, about how these layer ones, a lot of these layer ones like Ethereum and this merge, Cardano and this upgrade, and whatnot, how they're all trying to become essentially just more efficient. They're trying to become faster. They're trying to become cheaper, right, with cheaper fees, to scale more globally and become more, be more attractive to the average consumer and whatnot, and become, just be easy to build on and just cheap to build on overall. But also, essentially, they're trying to become what they like to, I think they like to call carbon neutral, right? They're trying to become more environmentally friendly. And and that's not just on the blockchain side of things, you know what I mean? That's not just what we're seeing now where, all these codes being upgraded to proof of work and whatnot, that we're gonna go ahead and see just a more environmentally friendly technology and whatnot. Um, and where that brings me? So that brings me to what a lot of things been going on with KlimaDao. If you guys don't know what KlimaDao is a blockchain carbon credit market, right? And they teamed up with Cynthia Lummis. If you guys don't know who Cynthia Lummis is the governor of Wyoming. And Cynthia Lummis has been working on this bill that she proposed not too long ago called the Responsible Financial Innovation Act, where she just is trying to bring more clarity to just all this new blockchain and crypto terms. Sorry, terms such as digital assets, distributed ledgers, DAO, which stands for I'm sorry, brain fog right now. Anonymous organization. Oh wow, I'm having a brain fart. So let's just go ahead and use our handy dandy Google, right? Because that's gonna annoy me now. And it's sad. It's sad right now that I still have to see what DAO stands for. Decentralized Autonomous Organization. You guys, this is a tongue twister for me right now, and it probably will always be. I'm gonna get. I got it. If anything, by the time I end my crypto journey, I have the only what I need to learn is to how to say this without getting tongue twisted. Decentralized autonomous organization. Yo, that's just a scary sentence to say, I swear. But anyways, so yeah, they're trying to, what Cynthia Lummis is doing is trying to bring clarification around these new terms surrounding blockchain and crypto and whatnot, smart contracts, etc. That bill again is called the Responsible Financial Innovation Act, right? We see it right here. And before I get to go too far, let me go ahead because I want to use this tool. This tool sucks. This tool real rap sucks. Look, it's not even working for me right now. And you know what I mean? It's not even working. Let it not work. Nah, this thing better work. I'm gonna go ahead. Boom, boom. I ain't want that. Hold on. Sorry, you guys. I want the straight line. Okay, hold on. Boom, because we did the charts. So next. So again, Cynthia Lummis, the senator of Wyoming. I'm sorry, I got a little bit off track there. I just want to be, you know what I mean? She proposed this bill called the Responsible Financial Innovation Act, and she's teamed up with KlimaDao, which again is a blockchain carbon credit market. So they go ahead and get these carbon credit from this protocol. I believe it's called Toucan. And if you want to learn more how exactly or what exactly they are, so let me go ahead and try breaking down this, simplify this the best way I can for you guys. So right, KlimaDao. We know who Cynthia Lumbus is, right? The the governor or the senator of Wyoming, whichever one. I'm sorry if I'm getting that wrong. Whichever one though. They teamed up with KlimaDao. KlimaDao is a carbon offset market. Now, carbon offset markets aren't anything new, but it being on the blockchain is new. Before I get a little deeper into KlimaDao, how do they go ahead? What is a carbon offset, right? That's probably what I should go ahead and answer first. So let's go ahead and see what exactly is a carbon offset. And I believe I had that somewhere around here. Not greenwashing, that's a little bit. Carbon offset, how do they work? Hopefully you guys can still hear me. Again, I'm Sunny and Soul Sovereign here in this channel, the Soul Sovereign channel. We stay up to date with all the latest crypto trends, technical analysis, and news. Back to it. So what's a carbon offset? Carbon offsets occur when a polluting company buys a carbon credit to make up for the greenhouse gas it has emitted. The money should be used to fund action somewhere in the world that removes the same amount of carbon out of the air or to prevent carbon emissions. Again, this isn't anything new. Carbon offsets, carbon credits I'm sorry, it isn't anything new. Um, but right off the bat, you can kind of see where a lot of things can probably go wrong when doing this. And first of all, like I was talking to with a few people, uh, does this really even solve anything? The main mission should always be to, prevent as much carbon emission possible, not try to pay up what you think your carbon emission is worth. Um, it's super detrimental. You really can't even put a value on that. So it really don't even make sense from the start. But again, it's not a new system. Is a traditional system, and what the blockchain is trying to do is make things more transparent, so we could go ahead and fix some things. Let me go ahead and switch this music because I am not talking over this music. Um, so again, that's what carbon offset is. And again, KlimaDao is a marketplace of these carbon offsets. And where again do they go ahead and get these verified carbon offsets from? The Toucan protocol, I believe, is where it all starts. And the Toucan protocol, I believe, the way I can wrap my head around it right now is they're trying to be a global, basically like carbon auditor in a sense. They're trying to know what what all projects are emitting carbon, and they're the one that's putting the value rules and regulations around those, and marketing out those so-called credits. In a sense, just promises, right? Those credits are just promises, because as they hold all that information, that they know how much carbon is getting emitted out to the world, and so they're coming up with the value like, okay, in this time of age, I need this much money to balance out this much of carbon emission. Um, yeah, we can make that type of stuff transparent. It'll definitely be way easier for everyone. Um, but yeah, that's what Toucan does. That's how that whole carbon market works, and those are the people that are working close with Cynthia Lummis. So why am I talking about this? Because again, we was talking about how blockchains are trying to become more environmentally friendly. This is how our world right now, our current factories and industries are trying to become also environmentally friendly, but not just environmentally friendly, because this protocol that KlimaDao is using is a fork of what they call Olympus DAO, right? And Olympus DAO is a protocol, is a protocol on liquidity model to help bring forth a more circulatory economic system. And what that means, so again, a protocol on liquidity model, right? KlimaDAO is a fork from Olympus DAO, meaning Olympus DAO owned all its liquidity from the very beginning of the very start of its existence, of the very first block. What if you want to say the same with KlimaDAO? What is the protocol on liquidity? The carbon offsets. So in a way, we are redefining what value is, right? They are tokenizing carbon credits. They are currencyizing current carbon credits. If that's even a word, they're making carbon credits a currency in a way. They're making it transparent. They're putting it on the blockchain, making it transparent, and that's what a protocol on liquidity model is looking like. And this model is what they're calling essentially, um, not just this model, but this model with good intentions and the transparency of its transaction and its profits, and again with good intentions, future intentions. This is what they call regenerative finance. Because with this protocol on liquidity model, plus mixed with good intentions, you can definitely redefine what value is. And with that kind of power, a lot can be done. So what they're trying to do, what KlimaDao is trying to do, and many others, where they seen this protocol on liquidity model work best in, is again this carbon credit market, and the transparency of their transactions and profits and whatnot can basically hold them accountable for when they do something good or bad. So again, they're more incentivized to do good, I would think, because of the transparency, and they go ahead and regenerate their communities and planet Earth, as a whole. And that's what they call regenerative finance. So I want to go ahead and dive a little deeper, read this article about, ReFi and whatnot, and how I think ReFi could really just change the game. So before I get too far, let me go ahead and use my handy dandy tool. So I talked about KlimaDao, City alumnus, right? Boom, boom. KlimaDao is again, I'll say it one more time. KlimaDao is a carbon credit market on the blockchain, where they get these carbon credits. Again, take it a step back from the Toucan protocol, and I'm sorry if I'm missing a few other protocols that probably work very closely with the Toucan protocol. Toucan protocol is just basically trying to be a global auditor of these carbon emissions, and together, with Toucan, KlimaDao, Cynthia Lummis, and a lot of these other politicians and lawmakers from the U.S. Maybe we could go ahead and start becoming, some people in the forefront of these, innovations, basically, because we don't want to be left behind. There's a lot of things you can do, and there's a lot of money to be made. I don't want to say that money is the all be all, end all be all, but right now as a country, we need to make money because we need to make moves. But again, with good intentions, and that's exactly what ReFi is. So without further ado, let's go ahead and jump into this article where it discusses a little bit about what ReFi is. So This article is written by, I found this article here on beingcrypto.com. And let me get out of this so I can move this around. Beingcrypto.com. And we are almost an hour into this. I almost feel like I need like another drink. Um, so yeah, before I get into this, one moment, you guys. Let me go ahead and get another drink so I can read this nice and fluently. Again, if you guys don't know, I'm Sunny and So Sovereign, and on this channel, we stay up to date with all the crypto, technical analysis, trends, and the latest news and whatnot. Again, we are on our way to becoming or opening our very first venture fund, and that's the reason we stay up to date with this market, so we can go ahead and place safe investments and whatnot, and not just be investors, but we also want to be utilizers of this technology. We just don't want watch the price action of this technology. We want to utilize this technology, because what this technology brings us, a whole lot of transparency, a whole lot of transparency, and that's basically like the conclusion of everything we've been talking about today so far. Um, but without going too much further, let me go ahead and get a drink, and I'll be right back to go ahead and dive into this article about ReFi, regenerative finance. So one moment, you guys. Yeah, man, if you guys been enjoying this channel so far, or at least this today's episode so far, put a like a sun emoji down there on the chats. That'd be cool. That'd be awesome. So so man, so again, before I get into this article, should I? I should probably take a step back, 'cause it's probably something I missed. Well, there was something I missed, but listen, you know what? I'm gonna just say this. If you guys want to learn a little bit more about KlimaDao, that's exactly what I missed. And let me go ahead and change this music, because I feel like it's a little not my type of music right now. It's not my mood. Um, so yeah, there was a little bit more information I want to give you guys about KlimaDao. We are a blockchain loving community, and we really like to dive deep. So if you want to dive deep more on KlimaDao and what they're doing, go ahead. Again, join our Discord. Follow me on Twitter, YouTube, Twitch, all that good stuff, TikTok, and yeah, just DM me. I'll be more than happy to bounce ideas, tell you what I know, and you know what I mean. Have a fun conversation. Soul Sovereign Convo. Um, and stay tuned for that, because we are gonna have people on this channel as well. We're gonna have some fun conversations, no doubt. Um, but yeah, if you want more information on KlimaDao, come hit me up on my socials. For now, we're gonna go ahead and jump into this article. Without further ado, let's see what this article have to say about ReFi. ReFi is the new DeFi. If there was ever a time for the crypto skeptics to ask regulators to tighten up their screws, it is now, says Ashley Taylor Buck, the co-founder of Resource. ReFi could be the answer. The crypto industry is battling turmoil. Market prices are dropping. There are meltdowns of crypto lending firms that were once held up as the embodiment of the industry's best. All of this amounts to a collapse in public trust in this movement's future. I apologize, I'm just stretching out my shoulders. In order to find a way forward, we must first address the root cause of this alignment. This is opposed to slapping on a band-aid over the symptoms. That needs to be a strong foundation for real innovations to come. We need honest conversations about the systematic issues within DeFi that have led us to where we are. By now, it should be clear that what started with the Terra Lab crisis is not just a nasty blip. Amidst a flurry of lawsuits and investigations, the legitimacy and longevity of crypto has been called into question, and it definitely has. It begs the questions: where were our fundamentals strong to begin with? Probably not. I don't think so. Or is this the exodus we needed to rethink the dominant and industry approach? The crypto credit crisis contagion, if I'm pronouncing that right, contagion. There has been much analysis and debate over the Terra Luna and Three Arrow Capital collapse. To what extent did the implosion trigger the contagion spread across the broader market? The fallout and repercussions of this has been felt across the industry and by ordinary investors, prompting comparisons to the 2008 global financial crisis. We have always been known that there are strong links between crypto and the broader financial market, but the fall of some of the safest projects in crypto tells us something. It is crucial to reinvest the fundamentals of some of these projects and the industry's relationship with credit as a whole. The Terra debacle called into question the stability and speculative nature of stablecoins. It really has. These are not based on underlying real assets, but on an arbitrage mechanism of which the value of Terra UST depended on. And I talked a little bit about these arbitrage mechanism, these what they call it. Talked a little bit about these stable coins on my last videos. Not on my last video, but a few videos back. But yeah, we definitely gotta find a safer investment, because a lot of people that look into stable coins or any stable asset, we want it to be exactly what they're called, stable. It's a dollar. $1 is a dollar. We want it to always be a dollar, but a lot of these stuff are deep pegging, and definitely that was felt by a lot of investors throughout the market. So let me go ahead and continue. Through this mechanism, traders are incentivized through high yield offerings to swap UST for Luna tokens and vice versa to maintain its peg to $1. A coordinated attack that set off a series of unstaking and selling of UST caused severe price volatility. The arbitrage mechanism could not rebalance it, resulting in a death spiral for both Luna and UST. Many crypto projects and funds relied on UST as a stablecoin. The UST collapse created a domino effect and losses throughout the entire crypto ecosystem. Shockwaves. The fall of Terra Luna is reminiscent of shockwaves felt across the global economy after the collapse of the 2008 U.S. subprime mortgage market, except there was no central entity stepping in to save the day. The advice of too big to fail didn't apply in the crypto world. After the Terra After the Terra fallout, there was a flurry of heavy selling and renewed calls for self-regulations, and foundation of a full-blown crypto lending crisis was laid bare. One by one, the top crypto lending firms began to move their funds in the face of liquidity pressure and over leveraged positions. There was an insolvency crisis quickly brewing. There was withdrawal freezes by centralized crypto lending platforms like Celsius, and ooh, Twitter was going crazy that day. It became clear that unsustainable yields and under-collateralized loans was exactly that, unsustainable. It created the perfect risk profile for high volatility and platform failures in times of market volatility. What is evident from this crypto lending crisis is the need for more transparency and accountability in the space. It was an echo of the 2008 financial crisis. Lenders got by with high risk assets that were under collateralized and overvalued. This grew from poor risk management and decision making, and retail investors paid the price. This is a systematic failure that requires an urgent refocus on greater transparency and accountability in the space, and a relook at the lending model on which these firms was based is needed. What does that say from the lending models that we see now? A lot of transparency has been there, but anyone that knows, is this an attack to lending platforms such as like Aave and these other blockchain crypto lending platforms? What you guys think? Leave a comment wherever you guys at. Let's keep going. Other market conditions. This crypto bear market coincided with a set of macroeconomic factors that combined to set off the seemingly perfect storm. Bitcoin prices slumped by a nearly 70% drop. So while all these, and it was, so if you guys remember, while all these stable coins was depegging, Bitcoin was dropping, and it did feel like the whole crypto market was just dying. It was dying. You had Bitcoin going down and down. If depending who you are, because I was looking at it as like a totally boring market. But depending who you are, it was a great time to create fear. Because like I said, this market is moving like a stock market now. We've been, in my opinion, consolidating super heavily, super boring, but it's the perfect time to create fear. While I say the market, like Bitcoin, is consolidating, it is still super volatile, and that a lot of money can be made and lost. Because these, 10, 20, 30% up and downs, a lot of people could lose, their livelihood with it, or create new livelihood. That's the beauty of this market. But yeah, during this time of all these stable coins deep pegging, Bitcoin was just dropping, dropping, dropping. The trust for Bitcoin and blockchain and the market as a whole was dropping as well. And as fear was, building up, now is the perfect time for innovation and, just creating your business plan and whatnot, and investing and learning, um, and just keeping track with, the real innovation. So once price does is ready for, higher lows and higher highs, and whatever type of manipulation, well, manipulation is, ready to go down, we can be ready to, ride that wave. So that's why we stay up to date with all the latest, trends, technical analysis, and news. So without talking too much, let's get right back into the article, because we do have a lot to go over. And it's 1:20 in the morning. I gotta get my baby in the morning. Let's go. Other market conditions. This crypto bear market coincided with a set of macroeconomic factors that combined to set off the seemingly perfect storm. Bitcoin prices slumped by a nearly 70% and valley from its all-time high in November 2021, which was what, around 65k, 64k, around there. The U.S. inflation rate rose by 9.1%, a four-decade high. this was not limited to the US and central banks all over the world scrambling to tighten monetary policy. This was an effort to dampen inflation. It's clear that the crypto markets are closely and increasingly intertwined with the traditional stock market and macroeconomic shocks. The world, like I've been saying, the world has also been dealt with ongoing uncertainty over the COVID-19 pandemic, the recovery phase, geopolitic, geopolitical uncertainty from the Ukraine crisis, and regulatory actions by the state all have an impact on the crypto's volatility. I guess that's more an opinion to me. Crypto has always been volatile before it's been intertwined in any of these political, statements. Let's keep going. ReFi, a possible solution. So here's where we get into regenerative finance. So again, how we started out when we got into Cynthia Lummis and KlimaDao, right? KlimaDao is again a carbon credit market on the blockchain that is preaching and heavily intertwined with regenerative finance. Why? Because they're trying to be completely transparent in this carbon credit market, and with their profits, they are regenerating their communities and our ecosystem, our planet, and whatnot by creating more wind power stuff, more solar power stuff, more hydropower stuff, whether it be turbines of all sorts. That's what's happening with these profits and money, because again, money is being used not as a mean, not as an end mean. Like if you go ahead and Google what ReFi is used as a mean to go ahead and continue regenerating our in essence our natural resources, which is our earth and our labor and us, if you will. Um, so again, so here's where we get into ReFi being a possible solution even in the world of stable coins. So let's get into it. One of the key innovations in crypto is decentralized finance, or what they call DeFi, right? It is a system of finance poised as an alternative to traditional finance designed with the goal to bank the unbanked. The idea is that anyone anywhere with internet connection can access and benefit from the alternative system, decentralized finance. With the onset of widespread adoption of crypto, the DeFi space has also accelerated both in supply and demand. Blockchain technology has reimagined the way central financial institutions operate by removing intermediaries. This is a hard word for me too, you guys, so forgive me. DeFi is designed to disrupt the way money is managed and accessed globally. In the struggle to achieve mass adoption, however, we must recognize that barriers to entry to DeFi and crypto still exist. The crypto winter should serve as a reminder of this. And yeah, so the crypto winter, meaning this, super bear market or consolidation, whatever you want to call it. Um, but again, we can see lower lows, especially for Bitcoin and Ethereum. I'm not no psychic. We must guard against future storms. I'm not talking over this, even though it did have a nice bounce here in the beginning. Had some P. Diddy, old Hove beat. But let me go. Yeah. Alright, ReFi, the future. Alright, hold on. The crypto winter should serve as a reminder of this, right? We must guard against future storms. We must witness greater adoption, and we must remain focused on building protocols that are digestible and accessible in a broad definition. And we must have a real world use case, meaning designed for people outside of the industry. That's beautifully wrote. That is really beautifully wrote. The future of finance is here. Regenerative finance, or ReFi, is a decentralized movement to create economic systems that create a more balanced relationship between each other and our natural ecosystem. The ReFi movement aims to create a new and improved financial system that is people and the planet are the priority for the economy, not conglomerate profit seeking organizations. I said that word so nice. Conglomerate. Mm. I be surprising myself sometimes, bro. Rap. At the core of the refi movement is the goal of positively impact the lives of people, community, small businesses, and others. It was created to put money into the hands of those working towards a better future. It does this by funding projects focused on respecting the environment, and it empowers community who has been disenfranchised from the global financial system. In a nutshell, ReFi aims to provide financial support to projects that are making lasting positive impact on the world. ReFi can help who historically have not been able to access or who have been excluded from the traditional financial institutions. It does this using the concept of a mutual credit system. Blockchain based mutual credit is the idea where people can borrow from each other. This bypasses traditional financial institutions that are increasingly serving the few and not the many. ReFi aims to make credit accessible to more people by developing new regenerative economic models. So let me try to break this down the best way and simplest way I can break this down, right? So again, redefining what value is, right? And we're trying to regenerate our community and our planet as a whole while redefining this new value that we are trying to initially tokenize, in a sense, tokenize so it could be transparent and whatnot. And how are these tokenized credit going to be, what are they going to be backed by, right? This new redefined value, whether it be a product or a service. And also at the end of this new currency, um, and at the end, the result have to be um, regenerating our economy, going back, our funds, our profits, and whatnot, going back to our economy and going back to our communities and going back to our planet and making it, more not carbon neutral, but actually, I don't know if it's called carbon negative or carbon positive, where we want to be, we want to always be, we always want to plant more trees than what carbon that we're emitting. We never want to be completely balanced. We don't want to plant just enough trees to be carbon neutral. We always want to be regenerative. So we want to be, and at the end of the day, we want to be abundant, don't we? And we want to keep our natural resources abundant. So, and we could, so yeah, they're trying to say, or not they're trying to say. I'm sorry, I'm kind of lost my train of thought there, but ReFi aims to do that. So ReFi aims to redefine what value is, and it plans to, keep the community and the planet in mind. And they're using uh, what we call capital and money as a tool to, to keep, you know, regenerating, and not as an end mean. They're not looking at profits as an end mean. We're looking at profit to put back into the community and be a regenerative economy, right? So let's keep going, and that's big. So stay right there on that same topic. It could be something like, and I could be completely wrong, but this could be a super cool idea. Food for thought. Food for thought. Um, like let's say you have a man. There's like mine. I don't know what to say this right now, man. So I get this patent, but like let's say you got a nonprofit, right? I'm gonna keep it real vague. Let's say you got a nonprofit and you're making good money, right? You're making good money with your nonprofit. What do you want to do with your profits? You want to be, you want to, you know, what's the word I'm looking for, man? Don't lose your train of thought, Sonny. Do you want to contribute to a regenerative economy? You know what I mean? So you're a nonprofit and you want to contribute to this cause, right? You want to contribute to this regenerative economy. So what you do with your nonprofit, you go ahead and you open more farmland, right? You open more farmland and you want to grow exactly what your community kind of needs in the local area, right? You want to supply your local community's needs when it comes to food, right? And let's keep it simple, right? Let's say bread, bread, and some beef, right? Let's say people eat they beef once a week, right? And your eggs and your chicken, right? So we go ahead, use those profits to go ahead and open some farmland that provides those needs, that provide those products. So the dairy, the meat, right? That stuff. And we do that. They do that for a few years with their nonprofit organization, help helping open these farmlands and initially, creating some type of business template. And as time goes on, this farm will initially become sustainable because they are sustaining their community, right? Um, and what we can do is, with that type of power, you couldn't even again make sure that you put the right type of people into taking care of those type of communities. So there's a lot that could be done with this type of knowledge and power. So without further ado, and again, so we're recreating what currency is, right? With these tokenized promises, basically. And so what you can do when you recreate value and you got the products such as the milk, the meat, the eggs, the chicken. Now you can create a tokenized currency for your products and labor, such as currency that give people access to your food for some type of promise. Like I don't got the whole business plan written down and whatnot, but food for thought. So much can be done with ReFi and just blockchain and just, when it comes down to it, just being transparent with these transactions. So let's go ahead and keep going. The regenerative economy and a mutual credit system. The regenerative economy could be defined as a circular economic system that the aim is to enhance life and well-being without depleting capital resources. Beautifully put, mutual credit is a multilateral exchange network in which indigenously created currency serves as a medium of exchange. It is reliant on our resources and our excuse me, and our com- contribution well, contributions to society as a basis for rethinking their financial value. Each network consists of members who mutually agree on what credit system can be backed by. Members can create their internal monetary system that is backed by commodities such as products, services, and more, and it is not dependent on pre-existing monetary capital investment. Members can access near interest-free loans granted in the internal currency of the mutual credit system. This loan could be used to purchase what is needed from members of the network. A member will settle their debt by selling their products or service to other members in the network. Again, if you guys know a little bit about this and think, want to talk about this, come hit me up. Let's bounce ideas. and whatnot. Let's keep it going. Why blockchain mutual credit systems offset risk? Let me read that again. I think I read it wrong. Why blockchain mutual credit systems offset risk? Okay. When it comes to cryptocurrency, those who invest are at risk of volatility. Let me see. Hold on. Yeah, let's go ahead. So, when it comes to cryptocurrency, those who invest are at risk of volatility. This can be fluctuations in the stock market, political factors, and inflation rates. This puts even the safest investments like stablecoins at risk too, and we've seen that. Volatility is another external variable that removes independence and autonomy from holders. Again, a person's financial well being is dependent on external factors that are usually outside of their direct control. Very true. Mutual credit on the blockchain is built to provide decentralized credit approval with contracts that offset accumulated risk. Unlike traditional mutual credit systems, there are no central authorities and no risk of the system turning into a dynamic reminiscent of a traditional bank. Instead, mutual credit on the blockchain provides stability mechanisms while resolving problematic and irresponsible risk management we are witnessing today. Mutual credit systems are accessible and community focused. Naturally, these are flexible and anti-cyclical. Cyclical? This means they are resistant to external financial factors that otherwise will lead to a downturn in the market. ReFi can better equip and protect the 99%. Hopefully you guys can still hear me. Using good skills, services, and human potential, people can move away from traditional finance or crypto liquidity. ReFi has the potential to revel. Wow, it's late, you guys. I can't read right now. ReFi has the potential to revolutionize the financial security of individuals and business owners. At scale, borrowing from each other should be more affordable and designed to support growth of the many rather than just a few. It should lead to better and more accessible rates over time as we remove the inefficiencies and extractive tendencies from today's centralized models. ReFi can redesign what currency means by using credit that is backed by good skills, services, and human potential. People can move away from being dependent on volatile digital and inflationary assets, preventing another crypto credit crisis. Despite macroeconomic factors that have impacted the crypto and traditional finance sectors, there is hope. The bear market has forced investors to be more conscious of their financial decisions. Very true. ReFi and blockchain based mutual credit systems are starting to shape the way businesses are run and how credit lines are accessed and what credit means as a whole. It addresses the exclusionary culture of traditional financial system by allowing more people access to credit. It also shows that people do not need to depend on traditional finance for loans. Therefore, ReFi removes the risk of falling into unimaginable debt. A blockchain based mutual credit system aims to shift the narrative of profit over people and planet in the crypto space, and it helps to foster a movement around how we build a more equitable, regenerative society. So, that was the article written by Ashley Taylor Buck, a blockchain entrepreneur. Um, beautifully written. Um, Very appreciative of this article. Definitely had a lot of gems in it, broke it down beautifully. What regenerative finance can do, and what essentially is. And so, hope you guys learned a little bit more of what. And we ain't done yet, but hopefully you guys from that article, because I learned a lot from that article, and hopefully you guys did as well. Um, just the potential of regenerative finance and what it can do, and the current movement of the protocol and its ecosystem and whatnot. And so yeah, so we see how this regenerative finance can solve problems from our traditional carbon credit markets to our stable coins and what exactly is backed by, and how we can hopefully redefine value, so we can make sure we can put value into a stable currency. You know what I mean? That be we want to see the transparency. So, and that's another big thing, the transparency of ReFi. Let's just call it ReFi for sure, right? Without the transparency, a lot of this wouldn't be possible. If not, all of it wouldn't be possible. So we got to keep that in mind. So as long as we could keep the transparency of the profits and the transactions, and then make sure the good intentions are there to continue regenerating our communities and our planet, then I really do see big things for this this model of business. Um, but again, this isn't the be all type of model. There are still problems, just like and starting probably from the very beginning with the most um, you know famous model right now, which is the carbon credit model. And there's still ways to double spend, and there's still a lot of loopholes that still need fixed within regenerative finance. But again, as long as we keep the transparency up and continue learning, I think we will always be heading the right direction for sure. So that being said, again, and to understand what we need to fix, we have to understand exactly what's the problems, and we have to have those discussions. And I found a good article from Curve Labs. Um, Curve Labs is I believe, is a major player in this refi space. Maybe also a fund, if I'm not mistaken. But they came out with this real good article, 13-minute article on the promises and pitfalls of regenerative finance. That we are going to get into this article here in a second. Um, I'm going to just go ahead and take another drink before I get into this article. It is a 13-minute article, so we're going to go ahead and try to get through it in an efficient amount of time. But definitely got some good gems in it. Again, I'm Sunny and SoVereign, and here in this channel we stay up to date with all the latest crypto market trends, technical analysis, news, and update. Why do you ask? Because we are opening a fund. That is why we want to fund more blockchain-based businesses that are ran by people that look like you and me, and by code, of course. Code, maybe code written by people that look like you and me. You know what I mean? Start from the source. Um, and that's the goal here at the SoVereign community. If you haven't, go join the Discord. Go follow me on Twitter, YouTube, Twitch, TikTok, all that fun stuff. Um, and again, I'm gonna go ahead and take a quick drink. Give me like 60 seconds. I'll be right back, and we'll jump right into this. check. What's up, everyone? Alright, thank you for that. Let's go ahead and jump into this article again, written by Curve Labs: The Promises and Pitfalls of Regenerative Finance. Go ahead and just change this a little bit. 1 second, you guys. Alright, so cryptocurrencies and Web3 are critical scapegoats for many, framed as overcomplicated vessels that rebrand an internet that does not need their benefits. Many critics allege that blockchains are a step back. They simply replicate traditional power structures and preserve structural inequalities. Beyond this, Web3 proponents are often dismissed as being too eager to financialize new types of digital assets, condemning the kitsch aesthetics of current trends like Bored Ape Yacht Club, which is true in a way if I'm, understanding that right. Bored Ape Yacht Club wanna financialize everything. They wanna earn yield from everything that they think is valuable and stake it and you know bond it with actual assets and just do some crazy stuff. Anyways, at Curve Labs, we view this critical gaze as an overreaction. It throws out the baby with the bathwater, unfairly undermining the short circuiting the utopian and progressive character of public distributed ledger technologies. There are diamonds in the rough with sweeping topic areas such as scientific research, ecological restoration, public policy, and community governance, all benefiting from Web3. So do saying like don't throw the baby out with the bathwater now. There are some good stuff about blockchain and this stuff. So this blog post addresses the most common critiques leveled at Web3, arming enthusiasts with the rhetoric they need to best represent the industry. We drill down specifically into the emergent dis- discourse around regenerative finance. Okay. Our hope is that by mapping out some present day arguments, we can help kickstart a dialogue between the critical sphere, characterized as groups of intellectuals who may be too theoretical, and unable to keep up with the pace of innovation, and the technological one alleged too blindly enthusiastic about the challenges they aim to solve, eschewing important ethical questions. Overcoming these unhelpful characters will set the basis for more productive conversations between parties. A brief note: critical disclosure in Web3. Excuse me, you guys. Before we move towards the most convincing critiques of regenerative finance, it is worth taking a brief look at some of the key wider frustrations with blockchain technologies. Blockchains are often perceived as existentially purposeless. They simply have no reason to exist. In this view, the tail is wagging the dog, so to say, and existing technology are more than enough to function at the basis for secure, open, and transparent economies. And do you really need a blockchain for that? Greenspan sheds light on some misuses while constructively suggesting some vetting criteria. Our take on this is that, like most new technologies, especially those of institutional character such as financial technologies, Blockchain can be either productively used or misused. It functions as a mirror onto which many desperate groups will project with their own politicals, economies, and beliefs. Many have pointed out, and this is a nice quote from this dude on Twitter. I feel like lots of folks here on Twitter, he's probably saying, need a reminder, crypto Twitter, need a reminder that decentralization is a means, not an end. Many have pointed out that trustless and decentralized attributes of blockchains are nothing more than the latest techno utopian fever dream, and Web3 destiny will be no different than its whatever its predecessors. That's a hard word. Web3 has been criticized for failing to deliver on the utopian values of decentralization and democracy promised. Nonetheless, we take the opinion that despite the fact that blockchains and DAOs are decentralized technologies, this does not imply that they will necessarily generate democratic and efficient processes or progress. I thought I said progress, but processes. The ones who are familiar with the term technological determinism knows that a technological infrastructure alone cannot be held accountable for the futures it produces. Excuse me. Rather, the set of governance practices, values, and ethics associated with the technology are equal or even stronger factors. While political and technological futures which prevail today are born under certain inherited infrastructures that are a cause for concern, this should not prevent us from experimenting with new socio-technic configurations aimed at generating more helpful, participatory, and just visions of society. The complex entanglements of technological, economic, environmental, and political systems should encourage Web3 innovators to unravel and pair the development of tools with ethical questions for holistic, plausible, perhaps even utopian futures. I'm gonna speak a little lower, so let me put my mic up a little more for you guys. Because it is almost 2 o'clock in the morning, 1:56 a.m. Eastern Time. So, regenerative finance ReFi aims to unify efforts and market-based. Let me change this. So, ReFi aims to unify efforts and market-based conservation and other forms of ecosystem preserve it, preserve preservation. ReFi is gaining traction within the Web3 space, working to connect the material with the financial through collection, verification, and valuation of underlying material reality. Let me read that one more time. ReFi is gaining traction within the Web3 space, working to connect the material with the financial through collection, verification, and valuation of our underlying material reality. Products and services, valuations of that, backed by products and services, is a lot to soak in. One strong sentiment against ReFi is the disdain against the perceived Financialization of the everyday. When it comes to nature, capital and this sentiment is particularly strong, as the natural world is often seen as something sacred, something that money spoils irreversibly. The idea that trees can be price tagged and rivers can be legal persons carry unease. To articulate a balanced critique of ReFi requires familiarity with two simultaneous bodies of knowledge: ecological market-based conservation and crypto economics. While the Venn diagram of individuals understanding both categories may seem small, many brilliant thinkers are building a constructive discord at this intersection. Critique: ReFi carbon projects are incentivizing fictional conservation. Sources: the biggest crypto effort to end useless carbon offset is backfiring. Response: the problem of additionality outlined here are bigger than Web3 and it preceded. Many Web3 projects aim to go beyond the carbon tunnel vision. Sources: Web3 capital assets taxonomy. What does additionality mean and why is it important? Market based mechanism for biodiversity conservation. A review of existing schemes and outline for a global mechanism. So this, I think it almost kind of says like those are the critiques and the responses, right? Something like, all right, well, there's problems with, KlimaDao, and there's problems with Toucan protocol, right? But there's also problems with the existing nature, the tradition, existing model that these protocols are, basically trying to solve. So yeah, there's gonna be problems in these, but like they said, they are, focusing on more um, beyond the carbon tunnel vision, and they're making sure basically every I is dotted and every T is crossed. But let's keep going. Web3 is carbon intensive. Sources: Crowdfund, Torlo, Matt, whatever. Response: proofs of stake, carbon negative blockchain. Sources: alright, and Celo Foundation. So they're saying, Web3 is intensive. The response is that, all these layer ones are going to proof of stake, like we was talking about in our last live. The ETH merge, Cardano, Bitcoin, and whatnot are going to go proof of stake. And they're also talking about the already carbon negative blockchains that are doing more good than anything for our communities and our world, and that's the CELO or CELO Foundation. Risk of nature's financialization. Existing practices of resource extraction are colonial. So they're saying that basically right off the bat that, I'm thinking that colonial stuff started the practice of, financializing everything. Like we financialize people. We financialize everything. Web3 is aware of the colonial aspects of traditional market based conservation and actively tries to push back on those. Crypto colonialism, the critique is only relevant to a minority of refi projects. Yeah, I'd never even really heard of that. Limit of anthro Yeah. Alright. Let's keep going. Argument. So, ReFi carbon projects are incentivizing fictional conservation. Meaning, so ReFi carbon projects are incentivizing businesses to basically, be fraudulent. You know what I mean? Be fraudulent. I think this is what it's saying. Argument. Prominent early refi projects like KlimaDao and Toucan Protocol are sweeping the floor of the voluntary carbon offset market to clean up cheap and less reliable carbon offsetting projects. They purchase in bulk to increase the price, making it more expensive for other markets actors to participate in. In turn, some argue that this strategy actually incentivizes more fraudulent or carefree projects. The higher market value alleged incentivized bad actors to produce old, cheap, and unreliable carbon offsets, according to Bloomberg Green. Spiking demand for cheap Vera credits, triggered by Toucan and his allies, has created new reasons to generate the bad offsets. The problem we are seeing is that Toucan is creating incentives to bring zombie projects to life that have no environmental integrity. So what they're saying that Toucan, where they're getting these carbon promises, these not carbon promises, not because they're not the actual promise. They're the information, the actual number of how much carbon emissions a company actually emitted. Um, they're saying that they are selling, useless or fraudulent um, carbon, documents basically. So like a dead company that's not even probably running could say like, oh, they're emitting this much carbon. Would you like to buy? Would you like to buy whatever you want to buy? So you can go ahead and try to balance out whatever you need to balance out, right? Um, and excuse me, it's past 2 in the morning right now. My train of thought's kind of going. But response, there is some truth to these claims. The argument misses a fundamental point. Carbon offset verification and veracity issues run deeper than market shifts and patterns of trading and price change. Toucan and Climb are only two actors of these markets. Their ongoing efforts to tokenize offsets merely foreground existing contradictions and deficiencies inherent to the already existing market. Their work accelerates mechanisms already intrinsic to a market that inherited from previous institutions they took no part in designing, just as KlimaDao makes it clear in their official response in the article. And let's go ahead and read their official response, because we should. Actually, if you guys want to read their official responses right here, actually, it's not that long, so let's go into it. The article conflates supply side issues in environmental commodity markets with demand side innovations designed to overcome market failures, fundamentally misunderstanding the problem our organization, KlimaDao, is attempting to solve. The supply side problems the article points out are valid, and one of the key concerns around carbon credits has historically been associated with the quality and integrity of the credits with the projects they originate from. We are aligned with reputable carbon credit standards like Vera and Gold Standard as they seek to improve provenance and integrity of credits on the voluntary carbon market. So we gotta learn a little bit more about this voluntary carbon market. This voluntary carbon market is where they go and um, give this so-called verified, authenticated documents of how much carbon they emitted and exactly what are their incentives. We gotta learn more about how all this really comes, full circle. But this article fails to consider the widely accepted need to scale up the VCM to meet the emission reduction targets prescribed by the Paris Climate Accord. You know what? So, yeah, this is their official statement. So, let me go ahead and keep reading. The VCM meets the emission reduction accord to deliver the 1.5-degree pathway necessary to avert the worst effects of climate change. The Task Force on Scaling Voluntary Carbon Market, a group of preeminent business leaders, policymakers, academics, and climate scientists, estimates the volume of the VCM will need to grow by up to 15 times by 2030. This is where KlimaDao comes in. By incentivizing carbon credits to come onto the blockchain, we seek to fix the market failures that have enabled bad actors to leverage asymmetric access to information to turn huge profits while regular people are locked out of the market. Our solutions increases transparency and market activity within what is currently opaque, heavily intermediated market while empowering everyday people to participate in climate action and scale this key market. This is KlimaDao official response. Again, transparency is the key. We need more people to, be in this, so we have more people to see what's going on and validate and just see what's, really going on, because we can't have a change if people don't know what's going on. So this was their official response. So back to the benefits and pitfalls of ReFi. So that was their official response. Projects like Toucan actually bring substantial benefits to these markets by provoking regulatory bodies and monitoring agencies to question the existing structures and verification methodologies. With Web3's provocation, they must now ask themselves how they can build more robust, reliable, and honest carbon offset marketplaces. Bloomberg Green article touches on this point, admitting that a task force of hundreds of companies are sustainably experts acknowledge that their multi-year effort to improve carbon offsets trading had to be scaled back because they hadn't yet agreed on exactly how to define a high quality project. Key problems such as carbon offset additionality are an opportunity for Web3 innovators. These kinds of standards, such as how to define carbon offsets and allow safe, just participation by benevolent actors, have been discussed in another of our blog posts. Relative energy consumption per transactions. Bitcoin energy consumption per transaction, Ethereum proof of work, and Ethereum proof of stake. Alright, argument. The Web3 elephant in the room is the carbon intensive nature of the blockchains. Many academics have rightly pointed out that the competitive process of adding blocks to a proof of work chain is, is, com- is computer intensive and requires a large energy input. This being said, estimates of the true carbon cost of mining cryptocurrencies differ. To get a sense of the problem scale, it is worth considering how the carbon footprint of a single Ethereum transaction as of December 2021 was 102 kilograms of CO2, compared to 226,910 Visa transactions, or 17,000 hours of YouTube. The energy question has not escaped regulatory scrutiny. Crypto mining has been banned in China, with the EU recently or Europe recently making attempts to ban mining as well. Response: the gigantic energy expenditure is due to proof of work, they're saying, an energy extensive mechanism required to validate transitions of some cryptocurrency, most notably Bitcoin. But we talked about how this is going to be most likely solved, and we touched on this on my last live. And it's basically with the work of going proof of stake and whatnot. So let's keep going. Furthermore, when using blockchain, many in- intermediary 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 agents and their associated carbon expenditures are normally not accounted for. This makes it difficult to compare the true carbon cost of a non-blockchain transaction. For example, when a person goes to a traditional bank for a loan, instead of using a decentralized finance application, the true carbon cost of that loan is equal to the commercial energy usage of the building plus transportation costs for the borrower and the bank's loan officer and so forth. In this sense, blockchain explicit those makes explicit those ecological costs already embedded in the financial transaction. While reducing proof of work carbon footprint is a problem that can no longer be overlooked, it would be a mistake to dismiss blockchain's enormous potential solely based on proof of work energy expenditure. Because we are going to proof of stake, and most likely in a few years, proof or something more efficient. Engaging constructively with criticism is a necessary step in formulating new frameworks and pushing for meaningful innovation. As an example, the Cello Climate Collective, Cello Foundation, and Flow Carbon recently penned an open letter to the U.S. Office of Science and Technology Policy in response to the office request for information on the ecological footprints of digital assets. Not only does the response address the energy intensity of digital assets, but also outlines the positive implications of Web3 on increasing the transparency and scale of the voluntary carbon market and therefore contributing to efforts in climate change mitigation. Arguments to many nature. So here's the argument. To many, nature is intrinsically valuable and does not need to be associated with a financial value in order to be protected and thrive, nor should it be reduced in scope to the mere services it provides a human society. If in financialized, market-based conservation, critics say the definition of success is muddied by capital accumulation rather than the primary objective of protecting and enhancing human and non-human nature. This is arguably counterproductive to the task of augmenting body diversity and implementing effective nature-based solutions. Moreover, conservation programs such as the UN Res Plus, reducing emission from deforestation and forest degradation, essentially commodify forests as nature's capital. This goes against indigenous people's spiritual and cultural cosmologies. This can have a real world consequence on multiple occasions, and indigenous populations have been displaced to make room for market-based conservation projects such as well-documented case studies of Zimbabwe's farmers and their cattle being displaced to install nature reserves in place of pasture, or how the Afro-Colombian residents in the coal mining region of Caesar have been negatively impacted by increased pollution and economic inequality due to government ill formulated carbon taxation. And here's their response. Reckless exploitation of natural resources as and extractive colonial practices are happening in the present and our business as usual. Over the past 50 years, U.S. companies alone have extracted more than 50% of U.S. national oil consumption from the Amazon rainforest, leaving destruction, illness, and pollution in their wake. So they're just basically saying these problems been here. They can't put it on Web3 or ReFi, and if anything, ReFi is trying their hardest to bring these type of things to the masses while making these type of things transparent so we can fix these problems. Crypto colonialism. So this article again tells you the pitfalls, the pros and cons of refi, the arguments and responses, and how we have to really come together to, have these conversations so we can make refi, a possibility. So let me go ahead and cross some of these out and let's get to the conclusion of all this. So what we got. So I would really love your guys' opinion on regenerative finance. Again, we are my opinion on this. I think this movement is gonna be around for sure. I think it's a great idea, and I think it aligns with what the U.S. wants to do already. So that's why um, I we really shouldn't overlook this Cynthia Lummis and KlimaDao partnership. Like we really shouldn't. Um, KlimaDao is right now the forefront of refi, and if we could get some things clarified, some rules and regulation and laws going, and be on the forefront of this movement, we could do some good things, make some money, and make sure that this space is led down the right direction. And so we gotta play our part as a country to make sure it does. So with KlimaDao and Cynthia Islam's partnership, working on that DAO bill, that Financial Responsible Act. Uh, I look forward to seeing how it truly defines, DAO, smart contracts, and whatnot. And I'm, excited to see the innovation happen and blooming after that. Um, so yeah, refi has major potential within, not only the carbon market, the carbon offset market, but again, with just redefining value and what we could do with that kind of power. And again, we gotta keep the transparency up like that. We can, the transparency up, the intentions well, and good things will happen thanks to these distributed ledgers, blockchains, and whatnot. So I'm excited, man. I'm really excited to see what's been going on within the crypto space, and I hope you guys are excited as well. If you guys got any questions for me, leave it down on the chat, or come follow me on, my TikTok, my Discord. Come join the community. Come follow me on where else am I at? On Twitch, on YouTube. And yeah, man, if you got any questions, just DM me. I'll be happy to talk to you. Again, I'm Sunny and Soul Sovereign. On this channel, we stay up to date with all the latest crypto technical analysis and news. Again, I see 2023 really being focused on going green. So, um, yeah, I wouldn't be surprised if we see, a lot of more major news on ReFi, KlimaDao, and whatnot. Again, 2023, I believe it's gonna be about going green. And if you're one to follow the stock market and political bills and stuff as well, let me know about are you seeing any type of real enforcement on these companies for, being carbon neutral? Um, or are you seeing the greenwashing, the lies, and the bad part of it? What are you guys seeing? Do you see these companies just completely ignoring this problem? Um, what's your guys' opinion? I got, yeah, and I'm really interested. Again, so what does this mean for us here at the Soul Sovereign community? So, sorry guys, this what time is it? 2:23 a.m. Eastern time. So we got a lot of things going on here. So again, I'm creating these NFTs. I'm using it as a fundraiser to start our Soul Sovereign Ventures, where we will go ahead and fund businesses and families and whatnot. Developer coders, people that look like you and me, to ensure a better tomorrow for sure. And so our plan is to, create these NFTs, sell them, use the money in the most transparent way. You guys will see what exactly the profits is being used for, held in, invested in. So again, that will be the Soul Sovereign Ventures, and one of our first companies that we're gonna go ahead and use the profits for, and it's gonna be owned by the Soul Sovereign Ventures. I ain't gonna give you guys too much on it, but it is going to disrupt the business, our traditional business models, and we are going to utilize blockchain for sure. We're going to utilize crypto for sure, and hopefully we might even utilize this regenerative finance for sure, because we want to make an impactful, you know, a meaningful regenerative impact on our world and community. So stay tuned for that. And again, the way we gonna do that, a big way, I would say 99%, is transparency. I want to keep everything transparent. You guys can come and see everything. Join the party. So again, I'm Sunny and Soul Sovereign. Right now, I'm saying like every other day, every 2 days, I'm trying to get on here and do an update on the market and whatnot, some latest news and whatnot. On the days that I'm not doing those, I know I gotta get on here and create number 7 or number 8 of my Soul Sovereign NFT, but I've really been working on this product, on the whole business model for this fund, and the very first investment business that we're gonna invest in, and that business model that again is gonna be so disruptive. Yo, if blockchain gave you purpose, throw a sun sign on the chat. If blockchain gave you purpose, real right. But again, Sunny and Soul Sovereign, I hope you guys enjoyed this episode. Let me make sure I ain't miss anything, and I don't think I did. I don't think I missed too much. Again, if you guys got any questions on KlimaDao, Cynthia Lummis, and or the bill they're working on, regenerative finance, stablecoins, the deep pegging that's been going on, the whole bear market that's been going on while this deep pegging been going on. Is ReFi the answer for stablecoins? Is ReFi the answer for blockchain? For many aspects of blockchains. Let me know your guys' opinion. Again, press that like button if you guys will. It will really help out. If subscribe, that'd be a blessing. I would definitely appreciate that. I hope you guys found, this information useful, and, I found it fun. Again, I apologize if my voice was a little down. It was right after work, but I think I'm gonna start doing it after work when I can. I was excited to bring this information to you guys, and again, I hope you find this found this useful. I'm Sunny the Soul Sovereign, and I will see y'all